Okay, let's look at NZDUSD and let's see what we can make out of the market. And we also look at NZDJPY, NZDCAD, and NZDCHF in this short video. Okay, so now if you have gone through the weekly outlook for this pair, you remember that in that video I told us that I'm seeing a selling possibility for the first few days of the week when the market open in the next few hours. That is Monday, 29th June 2026. We are expecting the market to go to the downside. But I also told us that the fact that the market is giving us all signs of going to the downside does not mean that the possibility of the market going to the upside is out. So that is why in our weekly outlook, we actually decided that as long as the price is below this structure, only look for selling opportunity. From Monday 29th to 3rd of July, as long as the price is below this level, it is safer to look for selling possibility. Okay. Now, what if the markets break out of this level and retest this level? Then you can now start looking for buying opportunity. So, but I also told us that that is just a setup. So when we start doing our daily analysis, which is what we want to start now, you will see other possibilities. So now this is for Monday 29th June 2026. The market will open in the next few hours. So let's now look at what can we do. What can we do? Now the market is below this level. So let's do our analysis if you can get a good entry for a trade when the market open. Okay. So now, of course, we have seen that this is a bearish market. As you can see from the bigger time frame, it's a bearish market, and some traders have already started trading from this level. Okay, but what do we do? What do we do? Now the market is consolidating. This consolidation is coming in the form of retracement. Okay, so I can call this a retracement, even though is a consolidation, but this is a retracement. And after every impulse move, there's retracement. After the retracement, we are expecting another impulse move. Now, but in this case, we are not sure where the market will be moving to. But like I always say, if the market want to go to the upside, fine, I'll follow. If you want to go to the downside, fine, I'll follow. So I don't try to predict the market. I'm not a guru of the market. But one thing I do, I learn to follow the market. If the market is telling me that you want to go to the upside, and after some time the market said no, I want to go to the downside, I will exit my trade and follow the market to the downside. So that is how I trade, and I advise traders to trade this way. Now, how do you now know when to follow the market? Because there's a lot of stop hunt in the market, fake out in the market. So how do you know when to follow the market and how to follow the market? Very simple. The first rule is this: always trap the price between support and resistance. That is the first rule. Always trap the price between support and resistance. Then, once you have done that, you wait for the market to break out from that level. That is the first thing you should do. Now, we have trapped the price. Now, there's every tendency that the market can break to the upside. Very possible. Break to the upside, retest this level, and go to the upside. That is to this level. Now, there's also every tendency that the market can break to the downside, give a good amount of retracement, then go to the downside. Now, that is a possibility. But does it mean that because the market break out from the structure, you start selling or you start buying? No. Okay. Now, that is the first thing I want to clarify. Okay. If the market break out from either of the, whether from resistance or from support. Look for, patiently wait for a full price action retracement. You know, many a times when the market break out from this structure, we want to jump into the market because we don't want to miss out. Please miss out. It's better for you to miss out than for you not to be patient enough for the market to retrace back. Now, if you don't wait for the market to retrace, you will have a wider stop. You have a wider stop, and there's every possibility that the market will hunt you out, you will be stopped out. So when the market break from the structure, either through the resistance, from the resistance, or the support, wait for a full price action retracement. Full price action retracement. Then wait for a candlestick confirmation. I recommend engulfing candle or a weak rejection candle. For instance, if the market break to the upside, wait for some level of retracement. Let me give an instance. The market break at, you wait for good amount of retracement back to this level, not one candlestick, not one candlestick. This is what I mean by full price action retracement. Okay, then you can have a trend line. Then when the market break out from the trend line, that is a good entry. By then, if the market is not ready to move, you will know. You will know. Okay. So wait for a full price action retracement. Then wait for the market to break the trend line again. Then you cannot enter a trade. That is one possibility. Now, the market can also break to the downside. If you break to the downside, look for good amount of retracement, full price action retracement, something like this. Now, when the market retrace in this form, just draw your trend line. Draw your trend line. Once the price break out from this trend line, once the break out from this trend line, then you can enter a trade. Now, this is the best way to trade because you'll be following the price movement. Okay, so don't just wait for the market that the market just break, you just start entering. No. Now, if the market break from, if you break to the upside, let's assume the market break to the upside, and these are targets. Where is the best logical place for your stop? Somewhere around this level. That's the best logical place for your stop. Try around this level. Now, but if you want to use a wider stop, please reduce your lots. Let's assume you want to use 0.4 at this level, and you decided to use this level. Please reduce it to 0.2 so that you don't lose so much if the market goes against you. So you can put your stop around this level. Let's say the market break to the downside. Where's the best place you can also put your stop? Somewhere around this level. Somewhere around this level. Okay, then you can target the next zone. Now, this is just a setup. Okay, so now one thing about the market, one thing I've learned from the market is that don't look at the market in one direction. I used to trade that way before, where because I'm seeing a sell, a momentum, I'll just be looking for selling opportunity, and the market has reversed, giving me buying momentum. But because my eyes are close to it, I will keep on entering the market. The market will stop me out. I will enter. It will stop me out, and at the end of the day, I will have so much losses. And when I will sit down and look at the chart, I will now find out that wow, this market trended upward all through the day. But I was entering downward all through the day because of I was not seeing the buying possibility. So I have to learn to look at the market, that the market can sell, the market can buy. So either way, I'm good. Okay. Now there's also something the market can do. I think this might be a little bit advanced, but let me just see if you can get it. Let's assume the market can break at to this level and retrace back this way. Most of the times when the market do this and you start seeing higher low, that could be a sharp retracement to the upside. Yes, this happened. So watch out for it, because there's sometimes the market will break down, giving you all the momentum of sell. The immediately you enter into the sell trade, you see the market reversing. But because you are hoping for the market to come to the downside, you will not be seeing the possibility, you will not be seeing the buying momentum entering into the market. So whenever you see higher low forming even in your sell area, just start to watching out for bullish momentum. If you see a bullish momentum, you can enter a buying trade even from this level. Yes, it's very, very possible. And it gives you leverage so that when the market gets to this your buy zone, by then you have already made a lot of pips, and you might decide to enter another trade just to scale up, maybe enter half of the position you entered, and while other traders have been stopped out, we are just enjoying the ride to the upside. So it can happen both to the down and to the upside. So but let's leave that. That's for advanced training, but this is what the market is telling us. Break a good level of retracement, candlestick for confirmation, bullish candlestick to the upside, or weak rejection candle to the upside, bearish candlestick to the downside, or weak rejection candle to the downside. So this is our setup. Okay, so do your own analysis and then add this knowledge to yours. I believe you make a better trading decision. This video, as always, is for educational purpose only. Okay, so let's move to the next pair, NZDJPY. Okay, let's go to the weekly time frame. Let's look at our weekly outlook for this pair. What did we okay, similar to the previous pair, similar. Okay, so now I want to tell us this, please. Let's look at these two price movement, like almost the same. You see the weekly breakout, you see the weekly breakout, almost the same. So I've seen so many traders entering these two pair at the same time. Please don't do that. Like you see some trader trading GBP USD and Euro USD at the same time. Don't do that. You are just doubling your risk, unless if you have to split your risks in between the two pair. Yes, that can be done. Let's say for instance I want to use 0.04 zero point 0.4 lot size. I can decide to use 0.2 for Euro USD, 0.2 for GBP USD, because these two pair, their price movement is almost the same. Okay, but if you are using 0.4 for GBP and you're not using 0.4 for Euro USD, you are just taking the same trade in the same direction. If you lose one, you lose the boat. If you win one, you win the boat. Most of the time, that is how it plays out. So the same thing with this two pair. Okay, so if you are trading this, please look for another pair that don't have close market movement with this one. Okay, so what can we do with this pair? I won't take much with this much on this pair. I won't spend much time because it has similar price movement with the previous one. Okay, now this is our sell area. As long as the market is around this level, we should be looking for selling opportunity. If the market break out into this level, we should be looking for buying opportunity. Okay, that is the weekly bias. That's the weekly bias. Okay, so you can also consider this level so that you can, for more accuracy, can consider this level so that the market don't bounce back from that level. So you can consider this level and take your trade at the top of it. At the break of this level, the retest of this level, and then you look for bullish candle for confirmation. Okay, so let's go to 1 hour time frame. Let's see how we can take a trade. Now, just exactly the same thing we said in the previous pair. You trap the price between support and resistance. This is actually quite straightforward. Trap the price, Now you wait for the market to break out from this level, either to the upside or to the downside. Then you take a trade. But like I said in the previous pair, wait for a full price action retracement, a full price action retracement, not one candlestick retracement, just a full price action. And when the market gives you that break retest, then look for candlestick confirmation to take a trade. Okay, so I'll take it one more time. The market break to the upside, give you a full price action retracement. Now you can look for the retracement in a smaller time, maybe 30 minutes or so, but 1 hour is fine. Look for the retracement, then wait for a bullish candlestick or a weak rejection candle to take a trade to the upside. The same thing if you break to the downside, wait for a full price action retracement and wait for a bearish engulfing candle or a weak rejection candle to take the trade to the downside. So that is the setup for this pair. And remember, our weekly bias is telling us sell. So have that in mind. Have that in mind. Our weekly bias is telling us sell. Okay. So have that in mind, even when you have a buying opportunity. Just have that in mind that the bigger time frame is telling us sell. Let's go to the next pair. Uh, let's see. Let's go to the weekly time frame so that we can see our weekly outlook. Now you can check the video on weekly outlook for all this pair. I dropped it some hours ago before that was on Saturday. So do well to watch those videos and actually see the weekly bias for each of these pair. Okay. Now, what is our weekly outlook? Our weekly outlook is this: we are expecting the market to break to this upside or to break to the downside. But because of the price movement inside this pattern, we are expecting the market to come to the downside. That's our first setup based on, you can see double top here, this double top pattern. Okay, this double top pattern, and you see the market is breaking out from this structure. So what we should be doing is to wait for the market to break out from this trend line and also break out from this level so that we can take a trade to the downside. That is our first setup. The market break out from this level, give us a full level, a full price action retracement. Then we'll look for bearish engulfing candle or a weak rejection candle and we'll take the trade to the downside. Or if the market break through these two levels, this double top, then give us a full level, a full price action retracement, then we can take the trade to the upside. So that is our trading setup for the week. And I don't think there's much we can do in the daily analysis until the market actually break out from that level. Okay, I know there are some people that actually trade that started trading this, but I will wait for the market to break from that levels. But if you want to trade this, you can, but I won't trade this because the price is far from my major zone. Remember, trade from the major zone, it has an advantage. Okay, it has an advantage. So I will not be trading this pair because the price is far from the major zone. Okay, it's far. But if the market do some level of retracement, I can take a trade. But remember, is a sell bias in your weekly analysis. Is a sell bias. So even if the market is giving you a bullish movement, be careful because our weekly bias is telling us sell, sell, sell. So as you are buying, have the consciousness that this market, this buying and buying will not trend. The market will reverse to go in line with the bigger price movement. Okay, so that is the analysis for NZD CAD. Now let's look at NZDCHF and see what we can actually do with this pair. Let's go to the weekly time frame and look at our weekly outlook. The weekly outlook, let's see. Okay, similar with the NZD CAD, so similar. The market has, you know, giving us all sign of a bearish movement. The market is trending to the downside according to the bigger time frame trend. Is a downward trend. So This is just a level of consolidation, and you can see that the market broke out from this level. All this could be a retracement for the market to go to the downside, but we cannot just be trading this because the market is still trapped within this level. So what should we be expecting? We should be expecting the market to break from this structure, give us a good level of retracement, then we can take a short trade to the downside. If the market break to the upside, fine, we can also take a buy trade to the upside. But looking at the trend, it's much easier to trade with the trend. So I will be on the selling side. I will not be looking at the buying side. Just I'll be looking for only selling opportunity in my analysis for the week, unless I see something different, then I can look for buying opportunity. So if you look at the smaller time frame, you can actually see that the market is giving us a sign of reversal. You can see giving us a sign of reversal, but I will not be trading this because I will not be trading this to the upside. I will wait for the market to give me a selling opportunity because of the bigger time frame. And this is where many traders missed it. Now there's a level of reversal. Now, if I to check very well, this is okay. I can say if the markets break out from that level, I can buy. If you break out from this level and give me a good level of retracement, break out from this level, retrace to this level, yes, you can buy, but I will not be buying this because of my weekly analysis. Because my weekly analysis is telling me that this is a sell week, is a sell week for this pair. Does it mean that the market cannot buy? The market can buy, but I go with my weekly outlook, which is telling me that the market is a sell market for the week. So even if the market break and do all the whatsoever I want to do, all the signs that is going to the upside, I will still wait for selling opportunity. Okay, so I can decide to follow the trend like this, follow the trend even as it's going to the upside. I'll follow the trend, waiting for the market to break, retest, then I'll look for selling opportunity. Now, I'm not saying that you cannot buy, but it is safer to trade when you follow the bigger time frame. It is far safer. Of course, you can make money, you can make profit buying this market because there's always retracement in the market. But if you notice, the movement with the trend is much easier than movement against the trend. So you have more pips when you are trading with the trend. So which means that you have a lesser possibility of losing the trade than when you are trading against the trend. Okay, so for this pair, I will just wait for the market to give me some level of selling opportunity. Now, I'll follow this trend. When I see a break from this trend, a retracement, then I can take a trade the uh to the downside. But if the market decides to buy, fine, that is good. There are other pair I can trade. I must not trade this pair. Okay, I have to stick to my plan. Okay, now this is the daily analysis for these four pairs. So do well to do your own analysis and do well to you can add one or two knowledge from my own analysis to get a better trading setup. Okay, remember this video is mainly for educational purpose, and please do well to subscribe so that you can get the notification and get daily uh, the daily analysis before the market open. And the market will be open in the next few hours, but this analysis is already on this channel, and that is how we do it every day. While for the weekend, we do analysis for the weekly outlook so that it will help us in our daily analysis. Okay, so keep in touch, click that notification bell so that you can get updates when I put more analysis. All right, see you in the next pair. Bye.